And welcome to the Real Estate Investor Show. Hard money for real estate investors.
Woohoo!
So, this is the point where I tease what's coming up. Well, Wendy's back. Jonathan has been here as a stalwart while Wendy was gone.
Thank you, stalwart.
But we're going to talk a little bit about Wendy's trip out west, and it was by car, so it's got to be interesting.
Oh, yeah.
And then we might even throw in a little deflation since I bought a couple of floaties.
There you go.
All of that right after this.
What will keep you buoyant?
Again, thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If you are interested in borrowing money and you're a real estate investor, go to carolinahardmoney.com and hit the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab as well. If you are interested in talking to Wendy about anything real estate, don't forget to sign up for Wednesday with Wendy. Wendy gives up her Wednesdays to talk to folks about real estate. She'll do a little 30-minute Zoom call with you. When you want to do that, you need to go ahead and get on her calendar because she's backed up for several months. And don't forget to subscribe, share, like, hit the bell, all that good stuff.
It's hard repeating the same thing every time, isn't it, bro?
Oh, I have a teleprompter. I still can't get it right.
I'll tell you
So
what.
welcome back.
It was really exciting to be out of town, out of pocket. I mean, like we were in the desert, in the mountains. I couldn't get internet, which was,
It was nice, right?
It was really nice. It was really nice. What was really nice is that I knew I didn't have to worry about anything back here, that everything was taken care of.
So
and
much
that
feeding
was,
your chickens.
it's so much, I meant in the office, but yeah. It was really, really an absolute pleasure.
So you didn't have to harvest any of those chickens when you got back.
No, they all lived through it. So that was a good thing. But wow, what an incredible trip. And the bookings that still came through for the Wednesdays with Wendy, I was really, really pleased.
That's because we kept pushing.
Thank you.
I kept promoting you.
I did get to listen to it, and you kind of made fun of me the first time you were talking about it, talking about how quiet it was in the office because I wasn't here.
We make
Or
fun of
calm.
you every time.
Yeah, I appreciate that. I thought I need to write that down and make sure they know I can hear you.
Well, what you should have done was typed into the chat. I can hear you.
I know. Well, I wasn't. I listened to it after the fact because I could only get intermittent service every now and again. But
it was quieter.
Awesome. I'll tell you, out west, that's where we were. We were in Montana, Wyoming, South Dakota, Nebraska, Kansas. I mean, it was amazing. Just beautiful, beautiful country scenery.
Mm-hmm.
We even camped 4 of the 13 nights I was gone, which was exciting. Of course, the next day was a little rough, but
no air mattresses.
It was, oh yeah, I had mattresses. But it was just really neat to see all the landscape and the animals, and you can't go out there and not appreciate your God when you see stuff like that. It was just really, really amazing. I'm putting together an itinerary because I've had so many people ask me about the order in which we did things and where we stayed. So I'm putting together an itinerary that I'm going to share with everybody. So if you're interested in that, email me, Wendy at Carolina Hard Money, and I will send you the itinerary we did.
That would be .com.
Yeah.
Most people know that, but there's a whole lot of different somethings.
Yeah.
So you have to be kind of specific now.
.the.
Well, let's get on to a little normal breaking news.
Oh, yeah, that's good.
and this is obviously breaking business news.
Yeah, because the real breaking news is going on in Kabul, and that's just heartbreaking.
Yeah.
We just heard that they had an explosion at the airport, and gosh, we need to be praying for the people over there. Not only the people that are coming out, but the people that are stuck and staying. And it's
Yep.
sad. So we need to keep those folks in our prayers for sure.
So with that in mind,
Exciting.
thank you
But true.
for the segue into interest rates
Yeah.
and unemployment stats.
Yeah.
You said it was quieter.
So continuing claims they were a little above estimates, but it was only like 3,000. So they were expecting continuing unemployment claims of 350,000 and 353 came in. So not a big deal. Not much they weren't off much. I'm sorry, those were new. Continuing were still in the 2.8 million range. I'm telling you, those continuing are going to drop like a rock after September, because that's when the extensions
federal,
in 21 states that still allow it are going to be cut off, and people will have to go out and get jobs at that point unless they extend it again.
Well, I'm surprised at the amount of people that are really still choosing not to work. I mean, we even, we're searching for a marketing director here, and, some accounting help as well. And it's
Also,
it's
more help
thin.
in our loan department.
Yeah.
But yeah, it's
thin.
it's like you would suspect there'd be more. And then even with our, like today, like we are paying more for these. Some
Same
of them are
people.
entry-level positions.
Mhm.
We're paying way more than
Right.
we ever have.
Right.
And we're still not getting,
Quality.
as many applications.
Yeah.
And we would normally
Yeah.
get, 50 applications for a position. We might get 10, 15 maybe.
That's right. It's rough.
Yeah, no, everyone that's in business for themselves is struggling to find qualified assistance.
It's the truth. I mean, even the fast food places, all the restaurants, they're limiting their hours just because they don't have staff.
Chris Wilson says, is it possible that people have decided to work for themselves? I think that's a piece of it.
Oh, yeah.
I think that people have decided to take up that entrepreneurial spirit in the wake of everything that happened with COVID. I think that's a piece of the answer. I don't think that's the entire answer.
Yeah, but that's a good
well,
one.
don't try me in the gig economy in California, though.
Oh, gosh, yeah.
They're going to make you join a self-employment union,
Mhm.
apparently.
I'm telling you, that state is just amazing. I met a woman that when we were out on our trip, and we're walking in the morning, and she was kind of walking in the same direction. And we introduced ourselves. She said, "And I'm from California. Let me just first apologize for my state."
I feel like there's people from Oregon say that to me too. Every time I meet someone from Oregon, they're like, "I'm so sorry for what our governor's doing."
I had to laugh at that.
That said, interest rates remaining stable. The housing starts, we actually were up year over year
Mhm.
for July. I think it was 700 and some change new housing sales for the month of
Mhm.
July.
And starts are up too, right?
Yeah.
Yeah. So
And-
lumber's down. That's a
we-
piece of it.
That's a great thing going on for
well,
sure.
lumber is down a little bit.
I mean, it's only 65% over what it was.
Yeah.
Not, at least it's not 1,400% over what it was.
Anymore.
Yeah, we still have tons of supply chain issues. We have a friend that Glenn Stromberg is in the manufactured housing business, and he's got his thumb on the manufactured housing manufacturers, and they're 12 to 14 months out on deliveries. He was saying that one manufacturer was telling him, "I got 10 brand new houses sitting out there in the parking lot, and I can't deliver them because I can't get doors."
Yeah, it's kind of crazy. Even siding, I was picking out siding yesterday for 4 new houses that we bought over the past 2 weeks. And the colors, I mean, there's like 14 colors to choose from, but they only had 3 of them in stock. you
Oh
could,
my
that you
goodness.
could get a hold of. I was like, wow, that's amazing.
My neighbors, my new neighbors, when I was on my way to the gym yesterday, I stopped by the house because I forgot to pick up. And this is how cheap I am. I forgot to bring some hydration with me. So instead of buying it there at the gym for $2, I stopped at the house and got my own.
Mm,
I only used $4 worth of gas
Yes, to do that.
yeah.
He's his mother's
That
son.
said, I was backing out, and Best Buy was delivering a new dryer to my people that just moved in. And as I'm backing out, I rolled down the window and I said to the fellows, as expensive as appliances are, I'm surprised they're not sending you out with armed escorts.
No kidding. No kidding. Yeah,
And now I'm a little worried whether he was thinking that they might be stealing them, not somebody stealing it from them.
yeah.
No, that's not what I meant.
Yeah.
Looks like Scott asked, when did CCM start, Carolina Capital Management? Carolina Hard Money's been lending since 2001. Is that right? 2001. And CCM, which is our fund arm, has been lending since 2014.
Right.
Yeah.
Right.
Mm-hmm.
Actually, Carolina Hard Money didn't start lending until 2011. Wendy herself had been doing that since 2001 on the hard money side.
Gotcha.
But Carolina Hard Money didn't start until, actually, it was at the very end of 2010, wasn't it? Like November of 2010.
I've been lending since 2001.
I didn't say that.
Okay.
I said Carolina Hard Money.
Oh yeah, Carolina Hard Money itself.
See, she
yeah.
never listens to me.
No, actually,
Mom,
I was
she never
reading,
listens to me.
I was reading a comment from a guy by the name of Michael Marr, and I offended him on California. I am really sorry. That was not my intention. California is a beautiful state. There's just crazy government going on over there.
I mean, there's
They all have issues. We
there's
all have
multiple
issues.
states that have the same thing. I mean, this isn't a political show, but everyone can have their own opinions. But anyway,
So I am profusely sorry
mhm.
for offending Michael Marr.
No, I travel to California quite often, except not recently because of the restrictions and stuff, but I frankly wouldn't live there because I couldn't afford it.
So let's keep digging.
Yeah.
Seriously, I couldn't afford to live there.
Yeah.
But it is a beautiful place.
Yeah, it
Yeah,
is.
yeah, absolutely.
It's the price of living in paradise. Right?
I suppose perfect weather comes with a cost.
So let's talk about kind of where we are in the real estate business, how home sales are going, how alternative investments in real estate that are still recession resistant, like multifamily,
Mhm.
Self-storage,
Yeah.
build to rent.
Yep.
We had Jim on last week with his build to rent model.
Mm-hmm.
We're seeing, didn't you tell me that a hedge fund just bought somebody's house for 25% over retail?
No, 20%. It's 20% over retail. Hedge funds, if you're living in a big city, hedge funds are buying properties at 20% over the retail. And it's not just one, it's several of them are doing that. And it goes down a little bit the farther out you go from the larger cities, but
Mhm.
it's crazy what they're doing. I can't figure it out of how they think they're going to get out of this, because they're banking on what they think the economy is going to do and what they think the real estate market is going to do. And it's so crazy right now. I would be really nervous about that.
Bill, you took it from somebody else, and I can't remember who it was, but the house doesn't care what it's worth, only how much can it pay.
That's right.
So I think that's the philosophy that a lot of these companies are going into, knowing that giant hedge funds are buying up tens of thousands of rentals, and smaller hedge funds are following suit, because once enough stock inventory is under control, you can control the rent rates.
Mhm.
Sure.
I mean, so at that point, it doesn't matter so much that if there's a correction in the market and the valuation goes down,
Right.
because you're still utilizing the depreciation of the asset and you're still getting cash flow. even if the appreciation isn't as strong, you still get these two other factors and one of them you can control.
Yeah.
And
Like
it said
that's-
still around 75% of the rental single family homes are owned by people who have fewer than 10 units.
Is it 75 or 50?
I thought it was like 75.
Okay. Well, it's going down every day.
Yeah, no, I mean,
That's right. That's right. And we need to be, I mean, what is that going to really do to our first time home buyers, the small families, people downsizing, in that what we're calling recession resistant market? What is it going to do to the people that really buy and want to live there? So much of what we have is really turning into rental properties because they're buying, I mean, a huge amount of properties, huge amount.
well, there's still opportunity for the owner occupant. They're just not going to be able to buy it in the hot markets. The hedge funds are going to be targeting properties that don't really need to be rehabbed if they're paying more than retail.
Well, even if it doesn't need work, they're doing that.
Or if it does need
It
work.
does need work.
Yeah.
Sorry. Yeah.
All right. So, but they're targeting properties that are a certain age,
Yeah. Certain age, certain, your
and then they're
normal.
going to be in certain neighborhoods.
Mhm.
So what you're going to have to do as an owner occupant is go outside of those particular submarkets and maybe buy something a little bit older
Mhm.
that you're going to have to work on
But you
as you go.
like the way, if I can get my words out, what you see happening is the pushing of out and away from the jobs.
Yeah.
So you have to live further away from potentially the job centers.
Sure.
Now, if there's more work from home scenarios, that becomes a greater reality that, okay,
Absolutely.
that makes sense.
Mhm.
But if we start returning back to the office, I mean, that creates a burden on people because either pay the rents and don't own and be happy,
Right.
or live further out and have a 1-2 hour commute.
Yeah.
Like that's a tough choice.
Some of the companies now are requiring that you're vaccinated or you have to work from home. So that's going to make more people work from home. It's going to have fewer people. What concerns me is the commercial real estate space because that's going to be underutilized. They're going to have to redevelop.
Yeah.
that.
Somebody's going to get hurt.
Listen, it's not. Every market has people that get hurt.
Yeah. That's
Every
true.
market has people that are going to benefit.
Yeah.
So as things change, you just need to be in the right spot at the right
Yeah.
time.
So knowing the future is the amazing Kresge.
And you can't look.
What's going on?
You can't look into the future. You can be lucky and be ahead of the game, or you can
Be diverse in your investments.
Be in a group with like-minded people that understand markets in different areas,
Yeah.
and never put yourself in a position where you only have one or two exit strategies. You need to be nimble and be able to change and react to the market. Although you don't want to react to the market, you want to be proactive as much as you can. But there's going to be times where you have to react.
Yeah.
But as long as you're in a position where you can turn that ship fairly quickly, your issues are going to be minimal.
Right.
Yeah.
Right. Yeah.
I mean, but in real estate, we, since the 70s, we have more or less enjoyed constant and consistent appreciation in the market that is coupled with inflation.
Mm-hmm.
And because we've been, forcing inflation since the 70s all along the way.
Sure.
So at what point does that, I won't use the word bubble because I hate the word bubble, but at what point does that program stop working?
And turn into deflation.
Yeah.
I mean, you brought that up. You were talking about Alistair McDonald.
Yeah, well, he was we've talked about him
And
before.
then somebody else was talking about deflation to you.
No, I was reading a book.
That's right.
Yeah. So
He reads.
Yeah. So what was the name of that book again? Do you
it's
remember?
The Price of Tomorrow.
Yeah.
Yeah. So it's a good read. One of the I guess the foundation point of the book is we live in a technology or a technological society where we're constantly advancing in technology,
Mhm.
and technology at its core is a deflationary, like a deflationary
Instrument.
instrument, I suppose. Yeah.
Yeah, it makes you more efficient.
Like, cell phones don't cost as much as they used to.
Right.
You know, you had a cell phone in the 90s, you were one of the, you know, or the early 80s, you were one of the very first.
I had a brick phone.
Yeah. But now, you know, so it's a force that keeps, you know, and then it also removes certain jobs.
Mm-hmm.
So technology at its core is a deflationary force. And at what point does quantitative easing and printing of more money
Yeah.
stop working against that force?
Yeah.
That's the core of the book. Is like, at what point does that stop?
Yeah. And what does that really do to the economy?
Yeah, because I mean, and I can't remember the exact dates, but over a span of like 10 or 15 years, the world global economy printed something to the tune of $180 trillion of money.
So that was the U.S.
Yeah. And in that same time frame, it created $40 trillion of GDP.
Mm.
So it took $180 trillion of printing money, of inflation, to create $40 trillion of GDP.
That's going backwards.
So like, at what, you know, and if we believe that things like exacerbate and keep moving forward at a faster and faster rate, just like technology does, will it take $350 trillion to create 40 trillion of GDP?
Right, right.
At the same time, it through those years, it has lifted up the lifestyle of more people in the lower economic.
100% across the global economy, there are far less people making under $1.90 an hour now.
Well, it doesn't matter about
100%.
It doesn't matter about the amount of money. Is
well, it's what it's worth.
You're getting with it.
Well, it's what it's worth. I mean,
let's face it. You know, back when they first started with the flat screen TVs, cost you $5-6 grand to get a small flat screen TV.
Yeah,
and it was getting to the point where they were going to start giving them away in cereal boxes because they were getting so cheap.
Yeah.
And that happened with a lot of assets. So there's certain assets that were going down in price, and then certain assets that continued to rise. So real estate is one of them because they only make so much real estate, right?
Sure.
God is only making so much real estate. And the real estate that he's currently making is not going to be habitable for a while. So you've still got that supply and demand thing going on. And then with the ability of technology to increase production at lower costs, it allows people all over like I said, the economic ladder to be able to afford a lot more stuff.
Sure. So it depends on where you are in the world for that. Like,
no, I get it.
Like GDP is measured across many different metrics. And in the United States, the largest metric is consumerism. So you're buying consumable goods. Makes up almost 70% of what we do. Like, so that's why wages in the US have to be so high compared to everywhere else, because we're consuming all their stuff.
Yeah.
And their wages. So if we want to build more stuff, we actually have to be paid less.
Yeah, that's right.
Like, and it's just economics.
Yeah.
Or you just have less people making more money.
Yeah. So it's like, you know, like China took the whole, you know, I mean, and everyone talks about it. It's like, in the economically speaking, they were really smart. They're like, we're going to keep wages low, production high, because our GDP is not going to be based on consumerism. It's going to be based on exports rather.
Yeah.
Well, recently, given what's going on with China, actually Vietnam has become the more lower cost producer of products now.
Really?
Almost 50% of the seaborne production stuff that's being shipped over the United States coming out of Vietnam.
Well, I thought it was born in the sea.
Too.
Excuse me? Seaboard. The shipping on shipping containers is coming from Vietnam, not China. And they've run into the same problem China has with the U.S. is that they've spurred on consumerism in China.
Yep. And once you do that, you have to start raising wages.
Yeah.
And when you raise wages, people, I mean, don't want to pay that much because they like the profit margins. And, you know, and again, technology is driving those costs down. Right. So, you know, a flat screen TV you can go buy for $300 now.
So the moral of the story is to invest in self-storage.
Right. Because everyone around the world needs to
They gotta have a
store
place to
all
put
their
your
next
stuff.
junk because they want to buy new stuff, but they don't want to
That's
get rid
right.
of their old stuff.
That's right.
Oh, yeah.
We got another show coming up shortly.
Do we?
Yeah, you want to talk about it?
Yes. Sharu, you mind putting the link up to the next show for us? Yeah, thank you. It is National Women's Equality Day today, so we're having Heather Dreves and Christy Moore, both good friends of ours and in mastermind groups with us. Those are very powerful women in real estate, and we're going to feature them on the next show. So there's the link to that. That'll be starting at 1 o'clock. Thank you guys for joining us again.
Thanks for listening to my rant.
Yeah.
Well, we
It was
did
a good
kind of ramble today, but that's all right. That's why we have this platform.
Yeah. All three of you have to listen to me rant.
That's,
And again, we're sorry about California. I mean, sorry about dog in California.
Anyway, thanks for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders for
Southeast.
real estate investors for the Southeast. If you're interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell. And lastly, sign up with Wednesday with Wendy. And there's
We can
the
talk about
link to
whatever
the
state you
calendar
want.
there. And yes, we can.
Hopefully it'll be real
She
estate.
will talk to you all things California
Yeah,
and what to invest in currently.
I do want to
that's
go
right.
see the redwoods.
Yeah.
I do want to do that.
Again, it's a beautiful state. I love going there, but I only like visiting.
Yeah, we like coming home.
I can only afford to visit.
Yeah,
That's
that's
right.
right.
Yeah, you have to get up too early there because everything else is going on
That's
early
right.
in the morning
That's
in
right.
California. All right. You guys have a wonderful day. We'll talk to you hopefully in 30 minutes.
That sounds good.